This is the Friday, December 20th, 2013 version of the Market Plus segment. Joining us now is Darin Newsom. Darin, welcome back.
Thank you, Mike.
5 days till Christmas. Y'all ready?
Sure, I'll go with that.
All right. Now, we didn't get a chance to discuss cotton during the show. 7-cent move, just hanging sideways.
It is for right now, and it seems like everybody's just sitting back waiting to see, I don't know, what the end of the year brings. There's just not a lot of activity right now. We've seen a little bit of commercial pressure in the markets. In other words, the supply and demand seems to be taking a back seat. So all that really leaves in the market right now is some investor positioning, and there's, again, no reason for them to get overly excited on the bullish side or bearish side. So you see this consolidation going on in cotton. You see it just trending sideways, waiting for that next big piece of news to move the market.
So it's good news, might see a jump, bad news, might see a slide.
I think so, because at least we're consolidating near its recent high. It's a lot better for cotton producers than if it was just moving sideways near its low.
Certainly.
So.
Now, the other big piece of news this week, or interesting market news this week, was the Class 3 milk move in dairy. We saw a jump from 1850 to I got to look at my notes, 1960 and change. What happened in the dairy market?
I honestly don't know, Mike, but I was going over my weekly charts just before we went on air today, and it was an amazing look. I mean, you just don't see this happening in dairy, and to me it would be some sort of a contra-seasonal move, because normally you would think this time of year with schools going on holiday break that you would see a kind of a slip in demand, and to all of a sudden see the market spike like this. It's going to be interesting to go back, dig through the news, see what's going on, find out what's behind this and if it's going to be long lasting.
And see if it's still around here next week to talk about.
Right. I mean, next week when this program comes on next week, we could see that dollar erased from the dairy market, and Class 3 milk could come right back down.
Certainly. Now, speaking of, as we're talking dairy, any news on the Farm Bill and the dairy cliff and all the shenanigans in Washington?
I have I've visited a great deal with DTN's policy editor, Chris Clayton, and he just he emphatically says, no, we're not going to have a farm bill, by the end of December, obviously, and no, we're not going to have $7 milk per gallon. So we'll see. I mean, it's a great media story, and you see it from all over, but it's just really not going to happen.
Folks like Mr. Clayton, policy analysts, have had a tough year.
Yeah, he has. He's been very busy. We actually haven't seen much of Chris in the office. He's been very busy covering everything going on. So.
Wow. All right. Well, now let's get back to the markets. We've got a lot of questions here. We're curious, as we look at the hog market, John in Sioux City is concerned, will PED-related death loss be a major market mover during the first half of 14, or has it already, is it overblown?
I think it's somewhere in between. Again, at our DTN Progressive Farmer Ag Summit in Chicago here recently, I had the opportunity to visit with some hog producers, and they said, it is going to limit. It's going to limit herd expansion, obviously, but it's more of a nuisance at this point than anything else. So it's going to limit this growth of supplies again. It's going to limit feed demand and all of these sorts of things. But it's not. It wasn't viewed as a major market major market mover, at least at this point. So we'll see how it plays out. But that seemed to be the opinion of the industry heading into the end of the year.
And that. What little risk there is that the market is interpreted, we've already got that priced into the spring contracts in the hog market.
I would think so. You look at where they're priced, and even how those spreads are sitting, and it seems to be everyone has acknowledged it's a problem. Everyone has kind of taken into account the effects of what it could have, as far as supplies and so on. And now it's what develops from this point on, and that's when we'll start to see the spreads change. That's when we'll start to see the futures react.
We've talked about the rumor. Now let's see the news.
Exactly.
Now, Drew in Montezuma, Iowa, is asking, what type of rally do you see in corn this summer, and how large do planting acres need to be to get sub $4 corn?
There's a lot of interesting scenarios one can draw in the corn market. Sub $4 corn, probably going to be pretty easy to accomplish. I know even all the talk right now is that we're going to lose 5 million acres from last year, and so let's just say that comes off the 97 million from the Prospective Plantings report and what we had most of the growing season. So we drop it down to 92. Even if we just leave yield, a national average yield around 160, we're still going to have ending stocks right around 2 billion bushels. So, you drop it 5 million acres, I think it's easy that we could go below 4, and worst case scenario, maybe we could drop it below 3 by the end of 14.
See corn with the 2, and that carries on. Jared had a question: what happens if everything is normal and we get a 3 billion bushel corn carryout? Then we're looking at that 2 figure.
Then comes the scenario that I painted at, again, that Ag Summit when I presented my market outlook, where you run the numbers and everything points at loan price again. And that is not what anyone in the industry wants to hear.
Yeah, yeah. A lot of excited cattle producers, perhaps.
Yeah, on the
Seeing
other
those
side
guys
of it,
in
from
black,
the end
but-
user, absolutely, they wouldn't mind it at all. But all of the industries tied to corn wouldn't be too excited about loan price, cash
No.
prices.
No, would not be good for the rural economy either. Now, the hedge whisperer in Tappahannock, Virginia, is asking if soybeans need to go to $15 in order to manage supply. How high is that going to drag November 14 beans?
I think the Nova will lag a little bit because, again, if we're going to lose 5 million acres of corn, everyone's talking about gaining 3 million acres of beans. But I think a rally would be inevitable. I mean, it's just going to ride the coattails. It's going to be pulled higher. So, if we're able to pull the old crop market or push the old crop market up to, say, 14.5, 15, which is not out of the question here in this first quarter of 2014, we could certainly see the November, right now it's in the 11s, get up to the 12, 12.5, maybe make a run at 13. Just lag just enough to show that most of the interest is in the nearbys. So I think we're going to see a rally, and I think it's going to provide us some solid marketing opportunities, unless something really changes in the market at this point.
And that brings it up. If we see that first quarter Nova 14 rally, 212-ish, and a little over, time to make some sales as we look at that South American crop?
Absolutely, because I mean that's really the problem facing this soybean market is how big is this crop going to be? And it's got a lot of weather it's got to get through right now. But talk is of 90 million metric tons in Brazil, 58 million metric tons possibly in Argentina. We're just talking about huge numbers at this point. Market's not really reflecting it, but when it does, when we start to see those spreads change, when we start to see basis maybe start to weaken, we're going to have to react, and we're going to have to be ready to get some new crop sales in place.
Okay, now general market question from Ryan in Roslyn, South Dakota. As we get towards spring planting, as we roll through first quarter next year, will the market reaction to any planting delays be tempered considering what happened this year? We had all the hubbub.
I think so.
And then big crop anyway.
I think the market learns its lessons. I think, sometimes it's a slow learner, but there was so much hype and so much buildup about all the weather problems this year to wind up with, a record crop. I certainly think the market's going to say, okay, yeah, maybe we've got planting problems, but let's remember last year when it really didn't do anything in the long run. There's so many things that have to happen after the planting season. I think it's just too early, and I think what we found is just too early for everyone to get overly excited that the crop's dead just because it's slow planting. So yeah, I think it will temper the reaction to such a weather situation.
All right, Darin, before we let you go, Phil in Canada has a question. He's curious, how do we get to $20 soybeans? What's that going to take?
Take a really big truck.
$20 American.
You're going to have a major weather problem in South America. The demand's probably there, global demand's there, but what it's going to take is some sort of devastating situation, devastating weather situation in South America that really trims back those production estimates. At that point, yes, then I think the soybean market takes off, and it's in position to do that, so it's not going to be a complete surprise. But it's going to take something like that, something catastrophic really, to get this market up to 20.
And there's nothing like that on the horizon as of now?
Not right now. Visiting with our weather team doesn't really sound like it at this point.
All right. Well, thanks for being with us, Darin. Really appreciate it, and hope you have a very Merry Christmas.
Same to you, Mike.
And thanks to all of you for posting your questions via Facebook and Twitter. Please continue to do so. We'll be back next Friday after Christmas to get those questions answered. We hope you have a very, very happy holiday and have a great week. Thanks for watching.